Good morning. Welcome back to the broadcast of Retirement Network. I'm Jeff Snyder. This is BRN AM for Wednesday, December 1st, 2021. And our top stories today: mortgage rates are going up, but buying a home can still be a good investment, and ways to improve your credit score before applying for a mortgage. Joining me now to discuss this and a lot more is Carl Delmont of the Freedmont Mortgage Corporation. Carl, great to see you again. Thanks so much for joining us on the program this morning.
My pleasure. Thanks for having me back on again.
Yeah, it's great to talk mortgages and mortgage rates. And I guess I don't have to tell someone in the mortgage industry that mortgage rates are going up. But I guess my question for you is it still a good investment to buy a home?
Yeah, I mean, look, I think that buying a house is more of a personal decision. It's not for everybody. In fact, when we had the housing bubble back in 2007, 2008, it was one of those things where we got to almost 70% homeownership, and that was the highest ever. There were other factors obviously involved, but you kind of wonder if maybe there's just a certain amount of people that should be renters for a healthy economy and a healthy housing market. But again, now is a good time to buy a house if you're financially and emotionally ready. Rates are still very competitive. And I think it's, most people, when they look at rates go up, they panic and they think, okay, I missed a boat or it's too expensive now. But when you look at things historically, right around 6% is a great 30-year rate. And that sounds really bizarre saying that today, right? When rates are nearly half that. But bottom line is, right now is a good time. Obviously, property taxes have gone up, home prices have gone up. So you just want to make sure that it fits within your budget and that you think you're going to be in this house for a little while because, there is cost to get into a house, cost to get out of a house, all those other things. So if it's just going to be a temporary thing, probably not a good idea. But if it's something where you think you're going to be there several years and you can recoup some of that closing cost and everything else, then it probably is a great opportunity. And I think you've seen the surveys by the Census, U.S. Census, saying that, people who own homes have roughly 80 times the net worth of someone who doesn't own a home. Probably a little bit misleading because people who own homes usually own, some of them, especially the wealthier people, own multiple homes. But the fact remains, if you have a property, you're paying every month, whether you're paying rent or whether you're paying your mortgage. In the latter, you're at least building equity.
Yeah, and that's really important. And look, I think you made a lot of great points. One, I just wanted to pick up on, you can't time the market, whether it's a stock market, whether it's the mortgage interest rate market, trying to get the lowest. And you talked about historical lows. We are still at historical lows. You and I both remember the late 70s and 80s, Carl. I had hair back then. I lived through that. A lot higher interest rates that people were paying. So historically, if you're paying under 6%, I would consider myself pretty lucky. You may not be as lucky as your next door neighbor, but all things are relative, and they may have a completely different situation than you.
Yeah, absolutely. And I think when people get into comparing what rate they have versus what rate someone else has, that's just not a good idea. You're never going to win on that argument. And it never just makes sense. I mean, the example I like to give people, look, if you could have bought Apple stock at $10 a share and you waited and you bought it at $12 a share, are you unhappy over that $2 considering where Apple stock is today? But some people lament over the fact that, I didn't buy at the lowest. And again, rates are subjective. I mean, there's people out there quoting really low rates right now. But if you actually look at what the closing costs are, they're charging 1-2 points to get there. And then the new thing now is when rates move up, you'll see some lenders start pushing the adjustable rate mortgages. Again, you have to really understand how those work because there's a margin, which is really the difference between what the margin is, the difference between the rate and what you're paying. And then, of course, there's the index. And, is that prime? Is it treasury? Is it one of these other factors? And then how often and when can it adjust? So adjustable rates are really what you're telling the lender is, I want to take a slightly lower rate than market today, but I'm willing to pay a higher rate down the road. Adjustable rates can make sense in a rate situation, but I still think where we are today, a 30-year fix is probably the one thing you should look at first and then look at all the other options.
Yeah, I mean, for me personally, I love fixed expenses. And my wife and I always talk about this. I love looking at my budget and saying, I owe this person this and that person that and that person that. Let's talk about being financially secure, and I think you kind of alluded to this. We talked about some wealthier families, but what does it take? And we're going to talk about credit score and getting that on the fast track in the second segment, but what is it? How do I recognize within my own budget as a potential purchaser of a home that I'm financially ready to do that?
Yeah, I mean, to your point, I think it's not only financially ready, are you emotionally ready? If you're buying a house with someone else, talk to them, find out, are we on the same thing? Do you want to live in the city? Do you want to live in the county? Do you want more of a rural, suburban area? How many bedrooms? Is a school system important? Even if you don't have kids yet, schools, if the system's really good, that's a great selling point. So maybe you don't plan on having kids, but buying in a good school district is a good opportunity because it pretty much guarantees you have a good resale, probably a quicker sale as well. But, what I say, look at your budget. What are you paying in rent right now? And again, when you have rent, if something breaks, you call the landlord. So there's one less expense there. But rents, we talk about inflation. Rents are seeing inflationary pressure like crazy right now. So when you look at where mortgage rates are and everything else, even despite rising home prices, everything else, you're probably going to find in most cases that a mortgage payment is going to be comparable to where your rent is. And we talked about this last time when we were on the show. People don't live on paper, but you're qualified from a mortgage company what's on paper. So you should put down a budget, figure out what your budget is, where you're comfortable, again, financially and emotionally ready. And then that should be where you should start your process and talk to a good, competent loan officer and figure out where you could be. But, that's probably the best starting point.
Yeah, really good information and a perfect segue, I should say, Carl, to our second segment. When we come back, we're going to talk to Carl about ways that you can quickly improve your credit standing before applying for a mortgage. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you stuck with a low credit score? A credit report and score that's causing you to be denied credit or pay higher interest rates than others for the same things? Then do what Terrence did and call Credit Repaired for your free credit evaluation to help restore your credit.
I started thinking about buying a new house, and my score wasn't where I needed it to be. I called and spoke with one of the representatives, and we just had a good conversation, and I liked what he was saying.
Just one call for his free credit evaluation was all it took to start back on the track to repairing his credit.
I'm seeing the deletions and I'm getting the report, so I know something's being done. It does make a difference to me.
All it takes is one call to get started.
Credit Repair has given me a second chance to have a better credit score.
Don't let a low credit score hold you back another day. Do what Terrence did and make the call for your free credit evaluation.
Call 800-819-4152. That's 800-819-4152. Again, 800-819-4152.
Welcome back. We're talking this morning to Carl Delmont of Freedmont Mortgage Corporation. Carl, thanks so much for staying with us this morning.
My pleasure.
All right, let's talk about, you laid it out really nice, historically low interest rates, the importance of looking at your budget, talking it through with your partner, and making sure that you're buying the house that you want to buy and you can afford it. But let's talk about prepping for that mortgage application. What are some things I need to be thinking about and others about getting that credit score at the right spot for a low interest rate?
Yeah, I mean, obviously, the higher the credit score, the better it's going to be regarding rates, terms, everything else. And honestly, if you're thinking of buying 6 months, 12 months away, now is not too early. Now is a great time to sit down with a competent loan officer and work on what your current situation is. If you know you're going to be buying in advance, this is a great time to lay out a plan to help do some things to actually improve your credit score. So obviously, there's a few things you can do. Paying your bills on time is number one. But also, if you can pay some of those balances down, and what a lot of people do, they make the mistake of, credit card shopping. Oh, I'm getting more points. I'm doing this. If you have a credit card that's 12 years old, you've been paying perfectly on it, and you cancel it because this other card says, hey, transfer balance 0% for 3 months, whatever. Now you have a new card. You don't want to do that because that can hurt your credit score. But a couple of things you can do to improve your credit score quickly. You want to look at and again, this is where the free credit reports are okay because you're just looking for information. Look for any errors. You'd be surprised. Over a third of credit reports do have errors in them. Now, sometimes these errors are they have you listed on the wrong street address, your prior address. They might have a misspelling of your name, whatever. But what you want to look at is for any errors. If there's errors, you want to fix them. Now, one of the tricks in the credit scoring game, usually from unscrupulous companies, is disputing accounts. Now, disputing accounts will, in theory, make your score go up because if you have great credit but one bad account, you dispute it, for a temporary period of time, that disputed account doesn't show up in your score. But after 30 days, it goes back on. In fact, in the lending world, if you have more than 2 disputed accounts, sometimes we have to go to what's called a manual underwrite because there's red flags popping up. But to prove your credit score, again, we talked about paying your bills down, utilization, using some of your accounts up. You can also do what's called an authorized user. So let's say that you had a child that just turned 19 and you wanted to help them with their credit score. If you have several credit cards, you could add them as an authorized user, and that would actually help improve their score, assuming you have a good credit history. They would almost inherit some of that history there. One of the tricks I do, and I've done this with my oldest, my grandma passed away and I gave her the car, but it's still in my name. We went to a local credit union, added her to title, and then what we're doing is we applied for a $500 car loan, but we told them we didn't want the money. We put the money in a money market account in the same credit union and said, please debit the account each month. After 4 months, we went in and paid off the $500. It cost us roughly, $26 in interest over that time. And guess what? Now her credit score shot dramatically because it was an installment loan, which is better than a revolving loan credit card, and her score shot quickly. So that's another thing. If you have an old beater lying around, you can add your child to that car and do a car loan in their name in that way.
Carl, let me ask you about you, since you brought it up, the credit scoring agencies, and we've had on the program Experian and some of the other credit monitoring services. What are those the types of reports that organizations like yours pull? Like when you're pulling credit score for a potential borrower, what services do you use, and how do you align what you're seeing from these services like Experian, not picking on them, just as an example, to what you look at as a professional?
Yeah, that's a great question. There's a lot of misinformation out there. So here's the basic gist of all this. When you're doing a consumer model, when you're just applying for a credit card, that's a consumer model. That's the most liberal model out there. When you go online and get the free credit reports, those are consumer models. So then when you buy a car, the car dealers, and when they go to their lenders, they're using a little bit different model. And then with a mortgage company, we have the most stringent model that we have to use because they can come in the middle of the night and take your car. They can just cut off your credit card hitting a button, right? Taking a house takes a while. So it's the most stringent model. And then what's interesting is within all those models, and we use Equifax, to your point, TransUnion, Experian, all three, we do what's called a tri-merge. But when you're applying for a mortgage, if you go online and say Credit Karma, you might see a 810 score. And then when you call your mortgage lender, you might see a 760 score. And you're like, what happened? It had nothing to do with it. It's just that the one model was more consumer and the other one is a little bit more strict, which is the mortgage model. But again, we use all three. So if you're buying, say, a husband and wife, you look at the middle score of the lowest borrower. Now, Fannie came out and changed that a little bit. We're now allowed to look at the middle score of both borrowers and take the highest, but still some of the parameters that apply. But so they're getting a little more generous and a little more accommodating, Fannie and Freddie, to help more home ownership.
Yeah. Last question for you, Carl. What about those first-time home buyers? All they have done is rent. Is a system in place, or will there be a system in place to look at those rent payments? Say you rented I lived in New York City. I rented in New York for 12 years. I've got perfect payment of my rent on time, on the first every month. Does that count towards getting a good mortgage rate? Excuse me. Sorry, couldn't get it out.
Yeah, I mean, so I just said how Fannie and Freddie are now changing the credit scoring model. Instead of looking at the lowest middle score, they're now looking at the middle score of both. Well, guess what? They came out a couple months ago, and now they're actually looking at rent. So your landlord doesn't report to the credit bureaus, so you're not going to get the credit score for that. But mortgage lenders that are going through conventional financing, Fannie, Freddie, we're now allowed to look at your rent history and use that as a qualifying factor, and it actually helps. So yeah, this is another way that Fannie and Freddie are really becoming more pro first-time buyer, pro-consumer, and really trying to encourage home ownership. So yeah, to your point, I mean, you think about New York City, think about you paying a rent and you live in the Carolinas now, you're probably paying less than a mortgage payment you paid a rent, many years ago in New York City. So again, it's one of those things where it's going to help people a lot.
Yeah, really, really important information. Carl, it's always great to see you. Thanks so much for joining us on the program, and we look forward to having you back again very soon.
I appreciate it. Thank you so much.
That wraps up this episode of BRN AM. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the information in retirement markets, technology, personal finance, so much more, all in one place, check out today's edition of our daily newsletter, The Morning Pulse. Want to search our archives or have access to our latest content? Download our app on Roku, Samsung, and over 100 streaming and smart TV platforms. We're back again tomorrow. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Waiting here for you to take and drink of. But if you're tired,
Now is your opportunity to co-create content around any topic on the First Lifestyle and Wellness Network. Reach a global audience through our platform and co-own exclusive branded content. All of our programs are available on demand and also as audio-only podcasts, so you can take us on the go. Broadcast Retirement Network, available anytime, anywhere, and on any device.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.